One sec. Right. As you go through this information, you want to tie everything together, right? There's no entries without structure. There's no structure, there's no order block, without structure. There's no imbalance without structure. There's no liquidity without structure. Everything ties together, right? There's no entry without an order block. There's no order block, you guys follow what I'm saying. Yeah, everything is connected. And I want you to always remember that as we go through the information, is going to make life a lot simpler for you. And I'm gonna give you guys some like do's and don'ts, some things that you probably may want to avoid, especially as you may be like advanced, but like new advanced, right? And just some things that will just make your life easier. I was actually having a conversation, over the last couple of days with my brother. We literally got started trading the same time. He's younger than I am, probably about 7 years or so younger. 6 years, yeah, about 6 years younger. We got started trading around the same time. I was 24, he was about 18. Yeah, and I was going through some stuff with him as well. And I actually want to share that with you guys too on this session. Because I believe too, like I said, we're gonna go over everything, but some things that I want to really highlight to help, really make it make sense for you and just to make, like I said, your life a lot easier when you're going about this journey, right? Now, first thing and first and foremost, when you come to any chart, guys, one of the most important things that you could understand trading is structure. Structure is the first part of it, right? And when it's just the first part of it, structure tells you what direction the market is going to go in, and you want to know or have a very strong idea if you are going to be buying or selling, and you build your bias around that, right? Now, always be open though, right? Be open to the market, of course, and not go in the direction that you probably anticipate is going to go in. Because remember that trading, nothing is 100%. You could do the best analysis in the world. Everything could align and look and make sense. And the market does not do what it is that you expect it to do. And that's where you got to be open and be fluid, right, with what is going on in the markets. Okay. Like there's no 100% trader. If anyone tells you that they don't lose, they are telling you lies. Okay. And if you feel that you won't lose, you are telling yourself lies. Okay. So understand that you will take a loss. You will be wrong. I am wrong sometimes when I'm trading, right? I don't get it right. I make mistakes. There's some things that I miss. There's some entries that I missed. There's sometimes like I've been doing this now 8 years. Yeah. Like there's sometimes that you just get it wrong, right? And sometimes it's like because you're doing it and 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 doing it, sometimes you could get complacent. Sometimes you could get tired. Sometimes you can miss things, right? You're a human being at the same time, so you got to give yourself grace in the process, right? But if there's one thing that you don't want to get wrong, is the actual structure of the market, right? And that's the place that we're going to start from. And I want to help you just understand and put some stuff in perspective, right? You guys know I like to start with the lines, okay? So just follow me here and yeah, as we go through it. So as you guys know, we're gonna start from this place, yeah. Whereas we know that the market creates higher highs and the market creates higher lows, right? Now, this pattern in the market here, we will see this everywhere. Okay, so it's important to know that you're gonna see this particular pattern everywhere where you create the market, when the market creates highs and lows, all right? Higher highs and higher lows, higher highs and higher lows. Now, it is important to know that you can sell at highs, yeah, in an uptrend, all right? You can sell at highs in an uptrend, but it's also very important to know that it's going to be harder to sell at highs in an uptrend. Everybody following? All right. It's going to be harder to sell at highs in an uptrend. Now, why do I say that? All right. Why do I say that? Because of course, yes, market is going up. At some point it has to come back down. Right? At some point it has to come back down. But we don't know when it's at some point. Right? We don't know when it's actually going to come back down. So for example, price, for example, here was going up, right? And you might think that, okay, it is time for it to come back all the way back down here, and price just comes back here and pushes up again, right? Or you might be thinking, okay, well, the market has been going up here for some time. It has to come back down, right? It has to start to push back down here, and it just continues to go higher, right? So as I said, yes, you can sell at high points because in your mind it's like, okay, this is the highest price has ever been. Price comes back up here, well, we should push down and sell. Well, well, in theory, that may be correct. The practicality of it, is actually pretty difficult, let me say, to try to sell at high points, right? So when I say high points, I mean high points in an uptrend. All right. So here's my advice, right? Especially when it comes to an uptrending market, guys, as much as possible, try to, we say all the time, the trend is your friend, right? The trend is your friend. As much as possible, try to buy, sorry, at these low points, right? Like whenever you look at the market, and maybe your bias is a buy, I want you to always have this thought first, right? The thought is, how low can I buy? Yeah. The thought is, how low can I buy? When I approach the markets, that's my thought process. And sometimes I give you guys some of these cons last week. Sometimes the con of that is that yes, you can miss a trade. Yeah. Yes, you could miss a trade, but for me, I'm okay missing a trade, right? Because guess what? Another one is coming, right? Another trade is coming. But what's important to know is like what the important perspective to have is that if I'm in an uptrend, I want to get the lowest price possible, right? The lowest price possible. Why? Because if I have the lowest price possible, the time that it takes for me to get my risk, right, is much shorter, right? The time it takes for me to go into profit, the amount that I actually risk, it is much shorter. Let me know if you guys are following what I'm saying. Okay. So practical examples here. All right, practical examples. Here, let's say you enter the market here for a buy. Okay, this was your entry price right here. Okay, and this, because the only stop loss here that makes sense is right here. Yeah, you put your stop loss right basically below this low point. Okay, and that stop loss on this particular pair, this is 181 pips. All right, so look here, it says 181 pips. Just move nonsense stuff, right? It's 181 pips. So for me to actually get like 1 to 1 on this particular pair, right? It takes me much longer. We're on a 4 hour time frame. It takes me much longer to gain this 181 pips, right? Than if, for example, I got into this trade right here. Yeah, I got into the trade right around here. It was a it was a 97 pip stop loss, right? Then my 1 to 1 on this trade, right? For me to gain what it is that I actually raised, boom, was just right here, right? So if the lower I buy, the faster I can acquire, what it is that I risk in the market. And then you know that everything else after that, right? No, you're going to a 1 to 2, you're going to a 1 to 3, right? You're earning 2, 3, 4 times the amount that you actually risk in the market. So the question, like I said, the question always has to be first, okay, if I'm looking at this market and it looks like it is trending upward, how low can I actually buy, right? Am I chasing the trade, right? Has price moved off already, and am I trying to chase it? Am I in a market like this, right? And just chasing these buys, okay? You gotta ask yourself that question. And where am I actually looking to buy in these trades? Like personally, I don't like when price breaks all-time highs. Right? I don't know if price breaks all-time highs because I'm like, bro, usually yes, price starts to run away, but I'm looking to buy as low as possible. So if we don't get in here, it's like, bro, I don't have an entry until price starts to create this type of structure, right? Where price starts to pull back and so forth. So note to yourself that every time you have an impulsive move, all right, every time you have an impulsive move, it is going to be followed by a correction. Okay, it's always going to be followed by a correction. Okay, and after that correction is where you are looking to take your bites. All right, after the correction is where you are looking to take your bites. All right, so the question is always how low can I buy? And then on the flip side, it's always now, okay, well, how high can I sell? And if price is trending down, right? See, like overall, we're in a bullish market here, right? So let's say, for example, like here where we were trending down, then the question has to be how high can I sell, right? I want to show you again, like the simple examples of this, I want you to look at the cells, for example, all right? Look at the cells versus the buys, right? Look at the cells versus the buys. So this is your cell. Look at how big the movement was in comparison to the buy, right? See how smooth the cells are? Look at this. See how smooth the cells are? See how smooth the cells are, right? See how aggressive price drops. Yeah, in comparison to the buys, right? You see here, price comes up, it comes back down, pushes up, consolidates, pushes up, comes back down, pushes up, and then it sells. It's like boom, yeah, Chris is just like falling off a cliff. Yeah, correct, right? The sells are much bigger, right? The buys it consolidates, pushes up, comes back down, pushes up, and then it sells, right? Drop off, okay? You buy, pull back, etc., etc. Then when we sell. All right, look at how aggressive the movements are. You guys see what I'm saying? All right, you guys gotta talk to me. Yeah, you guys gotta talk to me on the call. You see what I'm saying? All right. So when you get into the market, sorry, at these points, where it is as like I said, as high as possible, then the ease of which the sell comes, all right, it's much easier for you. Your trading becomes much simpler. It's easier to catch bigger moves. It's easier to like I mentioned, have great risk to reward ratios, right? Because once again, you're looking at the market through the lens of how high can I sell? I'm not chasing trades. Okay, not chasing, oh, the market is running away, let me sell. Nah, right? When you get into not to say, guys, though, that there's not a place for that, right? Not a place for chasing trades, but there is a place, yes, that you can sell, within these areas. That's just a different method, let me say, of looking at the markets, right? But ultimately, for your ease, for simplicity, for a great risk to reward ratio, you sell as high as possible. Yeah. When you try to sell in these low points, it's headaches. Okay, it's headaches, it's drawdown. So you want to always remember, I want to get into the market from as high as possible when I am looking to sell. The movements are a lot cleaner. And then on the flip side, like I mentioned, for buys, the movements are a lot cleaner, right? For some reason, I find out that when the market sells, it sells like way faster. For whatever reason, the market just drops, right? And it happens a lot quicker. All right. So personally, I'm selling a lot, in the market. All right. But yeah, so I just want you guys to grasp that simple, very simple concept, nothing complex. but just to understand that yes, this is what you're going to see in the market over and over again, no matter the actual time frame that you are trading on, right? Now, after, like I mentioned, now, after every impulsive move comes the correction, right? Now, why? Right? Why are we actually correcting? Right? What are we actually correcting? Or what is it that we're actually correcting? Always remember this, right? That the market has to trade balance. Okay, the market has to trade balance. So you're gonna find that the market is going to go out of balance and then try to rebalance. Okay. And I like to share this because it brings perspective when it comes to trading. It's not just by chance that price pushes up and then it's going to pull back down. It pulls back down because the market has traded out of balance. Okay. It pulls back down because the market has traded out of balance. And simply, very simple terms, it's like we have areas where they're just buyers. Yeah, like here, for example, like there were no sellers within this area. Okay. So it simply means like price has to come back and fill in these areas, right, before it continues to go up. Yeah. So the market is going to attempt, all right, the market is going to attempt to balance, all right, to balance back out before continuing to go the direction that it was basically looking to go. All right. You see, if I have any geometry trend lines within the zone, most times define trades that respect the zone from one end to the other. Okay, cool. All right. Now I'm gonna say something to that shortly, right? So I want you to remember this, right? That price, like I said, price has to balance itself out. Okay, so it's not by chance that the market is going to push up and then it's going to pull back down. All right. And this is how that you start to identify your entries and so forth in the market, right? By simply being able to identify the areas that are not balanced. That's first thing you want to look at, right? Like after you have picked up structure, right? After you have identified the direction that the market is going in, and that comes from breaks of structure, all right? That comes from breaks of structure. And when I say breaks of structure, you guys should, I'm assuming that you guys know what it is that I mean. Okay. I'm not going in to break down certain things, right? But very quickly, all right. Actually, let me know in the chat. Anybody does not know what I mean when they say break of structure, you can let me know in the chat, all right? Don't be shame. I will go through it. And just let me know. Anybody does not know what breaks of structure is? I know be shame, don't lie. All right, don't lie. Okay, market continue, gonna try and clear. Okay, high highs or low lows. Okay, okay. All right. Okay, cool. Everybody's all clear. Okay, great. All right. So of course, all right. Of course, so when you have market breaking structure like price taking a previous high or previous low, right? After that, what you're looking for is price to balance itself out, right? So the break of structure tells you or gives you an idea of the direction that price is going to go in. Okay, the break of structure gives you an idea of the direction that price is going to go in. Okay, so you got two ways that you could or that I would recommend just at a glance, like doing analysis in the market. You could do it from a 4 hour time frame, all right, to get, like I said, the directional bias and to also pick up the areas of which you're looking for price to trade back into, right? So that being areas of imbalance and also that being areas of supply and demand, all right? That being areas of imbalance and that being areas of supply and demand. So your 4 hour time frame, yeah, you identify, oops, all right. You can identify, right? One, that breaker structure. So this is going to give you an idea of the direction. All right. Uh, you can identify your imbalance. All right. This is going to help you to identify where price could return to. So this is where now you start to look for entries and you look for supply or demand zones, which is going to tell you where price could basically reverse, right? Reverse or hold, right? All the same, both the same. So you're looking for in this scenario, if this is your demand zone, right? Remember the demand zone is where the buyers are at. Yeah, everybody clear on that? Demand zones is where the buyers are at. Supply zones is where the sellers are at. Okay. So supply a demand zone, we're looking for price to reverse within these areas. Okay, you're looking for price to reverse in these areas. Supply zones, same thing. All right, you're looking for price, to reverse at highs. Okay, like where we have a lot of style momentum, for example, like here. Yeah, the price comes back up, you're looking for the market to reverse and push down. Right, whenever the market turns back into that area, looking for price to reverse and push back down. Okay. Supply, you're looking for price, the same thing to reverse and push back up. All right. So very simple. One, you got the market structure, which gives you an idea of the direction. All right. So for example, in this scenario here, you see where price was, consolidating for a long time, then price pushed up. All right. Broke past these highs and so forth here. All right. Broke past multiple highs. Okay. Yeah. So we got price breaking these highs, breaking structure. The next thing we have imbalance, all right, which give us an idea of where we're looking at for these plays, which is back in this area. All right. We also have a demand zone. So we know that the likelihood of price when it reaches that area, all right, that price is going to shift. Okay, the likelihood of that happening is very strong. Yeah. So we identified those particular areas on a 4-hour time frame. Yeah. And then what you can do is you step to like two time frames lower to a 15-minute time frame. And this is where you look for your entry. I'm going to say you're looking for your entry. This is where now you're getting very precise with your actual entry. All right. Now, the interesting thing about trading is that you repeat the same thing just on a smaller time frame. Like you're literally not doing anything different, right? So when you get on a 15-minute time frame, what you're looking for, you're looking for a lower time frame break structure, right? Or what we may call a change of character. All these the same thing, right? So you're looking for a lower time frame break structure. You're looking for imbalance for price to trade back into, right? And it may not necessarily be a supply or demand zone. You may be just looking for an order block. Yeah, which basically, all right, it's almost like the same thing. You guys follow me? All right, it's almost like the same thing. So in a 15 minute, it's just a repeat of what's happening on the 4-hour time frame. So you don't gotta get complex and try to do something completely different. No, you're literally going to step down to the 15-minute time frame and repeat these steps. All right. So for example, let's go to the 15-minute time frame. We're gonna use the same area once we could get back here. This is 10 p.m. on the 25th of, sorry, the 10th of February. Okay, cool. All right. All right. Easy. All right. So now, all right, we are in the area that we're looking at. We identified imbalance. We identify a demand zone. We identify, an area that we will want to pay attention to, what we may call a point of interest, right? And you come down to a 15-minute time frame. Yeah. You come down to a 15-minute time frame. Now, at this point, what you are simply looking to do All right, trying to get as close as possible for you guys. Okay. So at this point, what it is that we're looking to do, we're looking to get a break of structure, right? You're looking to get a break of structure. Okay. So for example, price breaking, would be ideally at this point. Okay. So market trading above this area here, that's ideally what it is that you will want on a 15-minute time frame. Okay. So here you will want to see because, and let me explain why. This, when we look at it here, we see like this is the market, push it. This is how the market was trading down. Yeah. Boom. So this was the last high that created this low. All right. The last high that would have created this low. What we want to see to give us a clear indication that price is going to change direction, we want to see price break through this particular high. That's your first indication that price is looking to shift directions. Okay. On a 15-minute, get off 15-minute close, spectacular. All right. Then what you want to see is price trade back into areas of imbalance, right? So we see, for example, a market pushed up here and we left behind areas of imbalance right here. Yeah. We got this imbalance created right here in the market. Okay. And you want to see price trade back into that imbalance. Yeah. Or like I mentioned as well, right? This is what we will call an order block, right? This is what we will call an order block right here. And we went through this last week, right? How many guys were on the session last week when I spoke about imbalance versus order blocks? I gotta post that session online. All right. How many were on the session when I spoke about imbalance versus order blocks? Let's see. Okay, perfect. All right. So we understand that, of course, depending on the pair that you're trading, some pairs often just trade off the imbalance. All right. Other pairs, trade more to the extreme, which we'll call the order block. Right. And it is important that you zone in, I would say, on particular pairs so that you get acquainted with how that pair moves, right? And sometimes, quite frankly, the market might just have, you know, this imbalance and you might miss the entry, if you were going for the order block. And we went through that on the session, the pros, the cons, etc. Right? But ideally, like for me, this is something this is what I'd be looking for, with this type of setup. So one, we have the Berkeley structure that we went through. Boom. First indication market is about to shift. Second, we identify the imbalance. So we know price, we're not chasing this, right? We're not chasing the market, it pushed up like this, spectacular, right? Great. But we know what's coming next, a correction, a pullback, right? Especially where we have areas of imbalance. So we're looking for price to trade back into that imbalance, okay? So at least we want to see market come back down to this area here. Yeah, at least that's where we want to see it come back down to. And then, all right, and then we can literally pick up entries from there, and go. Yeah, you literally could get into the trades and so forth from there and go. Kurt, got a question. Go ahead, my guy.
Yes, sir. Because I was not here last week. I was over in beginners. So, all right. So I see the imbalance there. Let me see these prices. But then I also see imbalance a little lower, like below 1.966, like around there,
Are you
right?
back in here?
Yeah. So what I'm wondering is after that break of structure, and I'm considering how low can I buy, right? I'll be waiting for the pullback. And although it did tap a area of imbalance, for me it feels too high, right? So I would have missed it because like, well, this feel like a 5% discount to me, and I need more, right?
Right.
So I would have missed that. So my question then would be, would you consider the fact that to get that break of structure, you then had this order block that appeared. That's order block was created. That gave you the break of structure. So rather than looking all the way down where I was looking originally, you're now basing it based on that order block, creating the break of structure, and then you're looking for the imbalance in between there.
Yeah, correct. So 100%. But also let me mention, right, and I'm glad you brought that up because obviously in real time, as this happens, right, and so that's good actually that you brought it up, right? So we could talk about it, right? This is why I want you guys, like to ask questions and so forth throughout the session, get into my brain, all right, so that I can break down things further, and so forth, right? So great question, Kurt. So let me bring this from this perspective, right? So let's say this was real time, and okay, cool. Yeah, so clearly I didn't get billed. All right. So, all right, let's say for example, all right, we brought this to this point, right? This is where we were at, right? This is where we are at right here, right? This didn't happen as yet. Okay, this didn't happen. All we had was this imbalance here created, and this imbalance here created with this vertical structure. So two things, right? And I'm glad Kurt brought it up. Two things. One, right? I would definitely be still very open, to the idea of price, trading back into this particular area right here, right? That is not invalid at all. Okay. What also is very important is the manner in which pricing broke this broke structure, right? And what I mean is with the momentum that it broke structure with, right? Like the strength of which price, pushed up with. So we have market come up, pull back down here, give us, like Kurt mentioned, an order block right here, right? Engulfing candle as well. So we had the momentum, pushing up, to break past this area. So the likelihood of price coming all the way back down here to push all the way back up, eh, might be a little unlikely, right? But but for me, I would still be very open to the idea that it could, right? While I would take an entry here, if it loses, right? For me, it would be like, if that loses, then I'm gonna be taking the entry, within this area. All right. So, like I said, it's not wrong to say, well, yeah, I'm looking at an entry I'm looking at an entry lower down, but with price giving me this engulfing candle here, I got a clear order block and so forth here. I would still be, like I said, like very open to at least the market trading back down, to this area here. All right. So I would be very open to that still, especially like I said, how price went ahead and broke the actual structure. Right. So it may be a case where it's like, mm, you know, it's like an either or type of situation. Like I said, this is where you gotta be fluid now with trading, and sometimes you might take a L before you actually get the win. All right. And sometimes you just gotta do that, right? Sometimes I take the L's because, right, sometimes I take the L, right, before I get the win, or sometimes I might be waiting for a lower price. I miss the trade. All right. And that's what you gotta be okay with at that point. All right. But it's something that you really can't get away from. You're not gonna catch them all, right? When you're trading. There's some that you are just going to miss, all right, because it just didn't align with what it is that you're looking for when you're trading. And I was talking to Shaki today. I told Shaki, bro, that you will find that I am one of the most patient traders, bro. Like, if it does not come, I'm sorry. Right? I'm I'm not going to be like, well, boy, are you gonna hear me like, child boy, missed that trade, but I ain't chasing you, right? You are going to set back up in a manner where it comes all the way back to what it is that I'm looking for. And at that point, I will show no remorse. Right? I'm going to hammer in that trade, right? And it happens. Yeah. And that's where you can't get caught up in like trying to catch everything, right? There's a lot of moves And I'm gonna show you guys, like there's a lot of moves that happen in the market and they just be chilling, right? Because it's like, bro, it just did not align with what it is that I wanted, And like, for example, I mean, this was perfect, but I just wasn't awake to get it, right? This happened at some like times I don't be trading. I don't be trading at 9 p.m. Why am I trading at 9 p.m., right? I don't be looking at the markets, right? I am done after the daytime. It's either very, very late, I may put in a trade, or very or morning time, which is New York session, right? Otherwise, I ain't taking the trade, right? So there may be some trades like this was a perfect, perfect, perfect setup, but this was also on Sunday. I do not trade on Sundays. Right? I am not looking at the market as soon as it open. So I am not going to take the trade. And this is what I'm saying. Like there's just some rules that you're gonna develop and have in place for yourself, right? As you start to trade. And you gotta be so okay with that. Right? So for example, this great like setup, market, broke structure here, all right? Traded right away back down into this engulfing, into this order block. Boom, and market took off. All right? Market took off at that point. Here, for me, when price broke here again, I would be waiting for price to return to this area before I take another entry. I am not buying in this area. There's nothing in here to buy from. So I'm not buying this. Why am I buying this? Right? So there's some individuals that may be taking buys and so forth within here. I am not going to. Right? So, it's like again, buy as low as possible. So you gotta be so okay with the rules, one that you put in place for yourself, right? And for the systems that you may have when you are trading. So I'll be so okay with that, right? Let me give you another example. Like this particular trade setup here this morning. Yeah. I think I'll go on a smaller time frame to really get into the detail of it, right? So, for example, here, great setup, market pushed down, brought some structure, etc., pulled back up, boom, entry, nice, all right? Very valid, nice entry here, market pushed down, we traded into order blocks, imbalance, and so forth here, right? Um, well, two things. I was okay with taking another entry right here, all right, to sell it because I was really looking for price to trade way lower, right? Let me see what's happening here. All right, let me move this. I want to shift stuff. All right. I was really okay with price, literally like coming actually all the way back down, within this area here, right? So I wanted to sell price much lower, right? So I was okay with that. But in the process, took a loss, all right? Took a loss, right, with the sell to then get the same kind of setup curve that we're talking about, the price trading deeper into, a higher area of let me say deeper, but a higher area of supply, right? Or the block, and then we got the actual move, right? So sometimes, it's not like you're wrong. Sometimes you may be a little early, sometimes you may have had full valid areas, and it happens, right? It happens, and you can't do anything about that. You just stick to your rules, right? Stick to what it is that, you were looking at and so forth in the market, right? Because there is nothing here besides this area. I wouldn't be looking for price to really trade back to that point as yet. Especially after rejecting this area like this, it's like you're looking for price to sink, right? And even looking back at it now, it's like I still would not have not sold within this area, right? But like I said, it's still open to price coming higher, right? Just because of this area right here. So market came back, then we hammer in at that point, right? And that's just the way trading goes. So I know my response was lengthy, but let me know if it made sense.
Yeah, for sure. And then also with the last thing that you showed here, it will also lend credibility to when you're marking up charts. It's good to leave your thought process on the chart. Like you have the zone marked up for if price comes here, I'm ready for it. So trade it up, stop loss got hit on that second entry, but at the same time, you don't know have to reanalyze completely because you're like, well, as we are here in this area that I was previously prepared to sell in, once it rejects, you get that entry.
Right. All right. So as we say, so that when you're trading or when you're doing analysis, be open to, like yeah, there may be different areas that price may trade into. Like I just be very open to those things. So like just a further example, you see if it's here. So GCAD, all right. So traded this last week, traded to looking to trade this today. So I was really looking for price to feel like I had something else here. Ready to go. All right. All right. So I was really looking for price to come up, into this area right here. So great. We can see this part of the block, this supply zone. All right. So we're looking for price to come up into this area here to sell as high as possible. Right? The way that, but then price, you sell price rejected this area right here. Like price didn't exactly reach that. And rejected here, boom, big engulfing candle on the 4 hour time frame. So like right now, two things. One, I'm still open to, this, all right? The price trading into this area, all right? Like anywhere really, within here. Yeah. We did get that rejection on the 4 hour, right? So I'm very open to that happening. On the 1 hour, we see how it rejected, right? So like this, the likelihood, like I really, really like price coming and trading into this area here. I would really, really like to see this. But just based on how price rejected at this point, took this low, traded back here now, like we could probably just see stock price just drop from this point. Okay. But then what do? We do the same thing that I just mentioned. So we got the 4 hour setup, or if you do it, so this was the other part, guys, right? Since we're here. So remember I said the 4 hour, then a 15 minute type of entry, or you can do a 1 hour and a 5 minute entry. Okay. So you do a 1 hour analysis, 5 minute entry. So one hour analysis, maybe a 1 hour break of structure, right? Which is literally here. Yeah, price broke down, the 1 hour time frame. Now you just wait for a 5 minute entry. Okay, so price is within the area that you're looking at here. All right, this is your order block. Boom, we traded right back into it. No, you do the same thing on a 5 minute perspective. Okay, so 5 minute, we got more specific. We got imbalance here on a 5 minute. Okay, we got an imbalance here on a 5 minute time frame. You see how price traded into it. Okay. But like literally before you could really like take those entries, you look for a 5 minute break of structure. All right. You look for a 5 minute break, that could come in the form of price breaking here. All right. Or if price goes ahead, trades higher, then you will be looking for price to break here. Okay. No, right? So remember, like I said, you're looking for structure breaks, right? You're looking for structure breaks, right? So just to be very clear again, right? A structure, remember, right? I know when you guys here, always remember this, right? This is a break of structure, okay? This is a break of structure. After break of structure comes this, okay? Comes the correction. When you get the correction, you're looking to buy. This is your area of entry. If it is that we're looking for a price to reverse, right? If it is that you're looking for price to reverse, then what do you want to see? You want to see a change of character, right? So basically what you want to see is this, right? You want to see price break down below now, this area. You don't want to see price hold. You want to see price break below. Price breaks below, then what's followed? It's followed by a pullback. And it pulls back, see the entry, and we sell it. Okay? And we sell it. So for example, like even here, like if you got this within this area and you saw price, break down below, and price broke below this area here, very valid. Take an entry here. Yeah, that's a break. Boom, price broke below. Boom, you just get to sell it. Yeah, that's your entry right there. All right. But so what happens is that when you wait for the breaks, like you avoid this. Right? You avoid getting in the market too early. Yeah, prices top the area and so forth, but you want to see prices break down. When prices breaks down, you got more confirmation of basically getting in the market, right? So you wait for the structure breaks. Yes, there's some candlesticks. So we went through that in the candlestick session that we did. There's some candlesticks that yes, you could trade off of, but the safest entry that you can have is that break of structure, right? If you get that break of structure, life becomes so much simpler, right? It becomes so much simpler, yeah. So you mentioned earlier that you don't like to trade at all-time highs, given this what given this is what oh, given this, what's your current tripping? Given this, what's your current opinion on gold and how it's ranging? Yeah, we're not doing analysis yet, guys. All right, we're not doing analysis right now. But let me just say, like, same thing. Nothing is different. Wait for structure. All right, market is giving us structure. We trade on the structure. All right. So, what it was going through with gold is there was structure to trade off of. Right, when the market was just, for example, at all-time highs, like there's nothing to trade off of, right? So, for example, like here, price broke highs here, there's nothing to trade off of here. But then price now started to form and give a structure, right? We did not break a higher high at this point. Yeah, price didn't trade above this high. So, okay, cool, pay attention, all right? Market broke down below. All right, here, pay attention. Cool. Now you got structure to trade with, all right? Because now you got price push down, all right? Now we're looking to sell in these areas. Price comes back up, boom, sell it, right? Because we didn't break the high. Price broke the low, great. So the bias is on the sells, all right? So the price comes back up, sell it, yeah? And we get this move, all right? Price broke down again, So we come back up. So price comes back up in these areas. There's only one thing looking to do is sell it, all right? Until, right, especially here though, we see, market came back up within that area, big push down, pull back up, sell it. Right? That's the one thing that can happen at this point is sell it. Okay, because there's nothing else that is saying buy. All right. So until price then goes ahead and breaks these areas, all right, then sell. All right, sell. And with the perspective of you got a bunch of imbalance down here as well, right? There's reason for price to trade back down within this area. Yeah, there's reason for price to get back here. All right. Yes, we broke all-time highs and we pushed up, etc. But price could trade back down. Right? When we don't know. Right. But we just working with what it is that we can actually see. All right. So great. Like the questions. All right. So yes, remember, so you get the breaker structure, all right? When you get that breaker structure, then you are looking for imbalance, okay? You're looking for imbalance, yeah? If there's no imbalance, look for the order block, all right? Look for the order block, and I would say like I try to identify some form of liquidity, okay? If you don't. If there's no imbalance, identify some form of liquidity. And liquidity, that's basically like, where the money is at in the market. So you identify liquidity by equal highs, equal lows, long wicks. All right. When you see these long wicks and so forth in the market, there's areas, market could trade just above those areas. So that's how you could, really start getting into the market. And where you can't identify any areas of imbalance, then it's areas of liquidity then that you go for, right? Sure, go ahead.
All right, cool. Can I share my screen as that?
Yeah, sure.
Cool beans.
This is good, guys. You see what's happening here. See what Kurt. This is what I want you guys to do. Ask me questions, we go through it. Let's make it practical. Let's talk. You know.
You're gonna have to open up the other
Give me a
people could
sec.
share screen thing.
I can't. I do that in here though.
All right, because we're in a breakout room.
Yeah, that we can.
Ooh. All right. All right, no worries. I'll call numbers then.
Hey, actually, try this. Try it now,
Oh,
Tommy.
yeah, yeah. All right. So I put the replay tool on, right? So this
Mhm.
goes up to a little bit. So we got this uptrend happening here. And when you were explaining just now, like we got higher high, higher low, higher high, higher low, higher high, higher low, higher high. And then we drop here. So we got this break, right?
Mhm.
Now I'm following this by we taking it step by step, but then overall we still want to pay attention to overall structure because they could see how when we fast forward, I could have taken an entry in somewhere that I shouldn't have, but I would have still been following structure. All right. So let me just press play from here. All right. So we were going up, we got this break here, we pulled back. So we should still be going down. We're on a 5 minute time frame. All right, so that's cool. Let's see. We got price pullback here. We could have sold again, ended up down here. This would have given us another. Oh gosh, stop calling me. This would have given us another break, and by all rights, we should look for a pullback. Oops. Right, should look for another pullback so we can sell. Right, once we're below this high, we should still be looking down. But let's see what happens here because this has happened to me before. Right, so we end up instead of selling somewhere below this high, we end up price ends up pushing up even above that.
Mhm.
So I don't know. The rest of you want to call if we were looking at this just by paying attention to what happened after this green line, we may not have considered if we got a break of structure on a higher time frame because we on this 5 minute time frame. So we might have been looking at this, but we forgot about these over here. So if I mean, I guess it's a lot. It's more of a observation of me looking at it after you pointed it out. But if I forgot about these as lows, and when this happened here, I looked to see, all right, what was actually the lowest point that I just broke to get here. Let me take off some of this stuff so it's cleaner to see. When we got down here, if I said, all right, I know I broke under here, but there was this over here. If I'm lower than this, did I break this low? And then did I break this low? And if I did, would that mean that when this happened, that I should have been looking for a pullback based on breaking this low, which should have taken me somewhere up here?
Yeah,
Or am I
so this
overcomplicating things because you know how my mind works?
now what I was gonna say was that at that point, that is where is like you only know like the shift is going to happen because it happened. You know what I mean? Like you only know that price is not going lower because right price didn't sorry, you only know that price is going higher because price didn't like respect the area that you were looking at to continue to drop. All right. So
Right.
it's like, price trade above that is okay, all right, cool. Well, we could be going into this higher area here of imbalance, which we are now, or we could be going, like I mentioned, this could be a liquidity grab to trade higher, right, into the actual area that we're looking for price to go into. But you're only going to know those things after it happened, and that's where like you can't really like just predict the market right the way through, right? So, and this is where you just respond to what it is that the market is giving you. So we have price give us, like I said, that push down. Yes, it broke structure, all right? Yes, I would say that price traded below this particular area here, which would have been a strong low previously. Price traded below that, and then the market pulled back up, right? To say that I would have sold this here again, no, I wouldn't, all right? And let me tell you why. All right, I will tell you why. So the reason why, yes, I was looking for the sales. This happened, missed this. All right. I would have sold here, right? But missed this. And then market come down and it come back up. I would not have sold at this point. Why? Simply because this is liquidity buildup, right? So yeah, we had, price, and that's why it didn't sell as yet, right? Yeah, we have price, push down, pull back up here, push lower, and so forth. But we also had, this was a liquidity buildup here, and we also left this area of imbalance here. So I would feel better right now selling in this area than trying to attempt to sell at this point here. All right. And this is where no, the market structure could get a little tricky because you may see, for example, things like this, right? And then the expectation is for price to come back here, come buy again, but then price does like this and then buys, right? Because usually what this is down here, it is one, either there's a buildup of liquidity or and two, price trading into imbalance, right? Which is basically, when we look at it, that's basically what is going on here. So it's like price push down, right? So let me do it from all right, let's do it from this end. All right, so it's like this is what was happening here. Push down, boom. Well, this was a significant pullback. So let's say that. And we had this, right? And we pull back down, push up, boom, push down, pull back up here, and we push down again. All right. And then we pull them back up now here and then this area. So for me, like I would feel like I said, I would feel better selling here, all right, than trying to sell at this point right here. All right. But also taking into consideration that we have here that we could sell at all right, some higher supply zones up here. All right. So that is also very possible. This is also very likely as well. All right. So that's a way, all right, to stop yourselves from like selling too early, buying too early. That's what we go in the lower time frame. All right. So for example, like now we're on a 5 minute time frame. So it's like just wait for the structure break. If you don't get the structure break, then we're losing nothing, right? Because price just did not hold at this point. Price continued to trade and trade above. It traded above, great, it goes higher, we do the same thing again. All right, just wait for price to break. So it's like, no, I'd be looking for the price to do like this. Price does like that, I pulls back, so I selling. All right, I'm in. All right, are we gonna either uh win this trade, right? Or we're gonna get stop out and price gonna trade higher at this point here. right? And that's all you do, right? Try to, as much as possible, limit your entries, right? Let's say limit your entries, uh, uh, when you don't have bursts of structure, right? Or when you don't have like what we'll call a lower time frame shift, right? If you don't have that, then it's like just relax on it, unless you are running for the first to the party type of entries, like I always say, is more risky, of course, because you could get into the market at this point here. Yes, you will have a good risk to reward, right? It's always great. For example, right? You will have a great risk to reward. We also run the risk of praise, obviously just trading through the area, right? And yeah, that's what happens. That's how it goes. So just trade more. They try to get as much confirmation as possible, especially because you're on the 5 minute, right? Especially because you're on the 5 minute, and just wait for those confirmations and so on, guys. Right? So it is 8:30. That time came very fast. Right? I didn't even realize. But I hope you guys got something out of the session. Let me know if you did. All right, let me know if you did.
I did.
Yeah, sure, Kurt sure did. Right. Plenty for sure. I did for sure. Stacy, Grace, Juice. Let me see. Let's see who's not going to respond today. That we're gonna make a host and leave them on the call because they fell asleep. All right. That session, loads of clarity. Need to go over the session. Definitely. Okay, good. Good. This is the session I needed for today. Okay, awesome, awesome. Glad to hear it. All right. It was good. Okay, great, great. Everybody respond up and nobody want to get mad at the host now, right? All right. Awesome, awesome. All right, so uh I just have to keep going over and over. Yeah, and that's the thing, it's just practice, just get accustomed seeing these different scenarios, right? Get accustomed trading these different scenarios and so forth, right? You know, the more you see it, the more confident you become, because then sometimes you're able to take certain entries in confidence because it's like, I've seen that before too many times. Let me take that particular entry, right? And yeah, that's why I encourage the replay tool. That's why I encourage going over information, like it just makes sense. All right. Practice, 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 practice. That's what trading is. Right? You're not going to get good by just watching videos. You get good at trading by trading. Yeah, you don't get good at trading by just looking at a chart. You gotta trade. You gotta build that muscle. It's like you don't build muscle in the gym by just going to the gym and looking at the weights. You gotta lift the weights. Same thing with trading. You gotta execute trades, feel the emotion, get into the market. All right. So that's why I recommend, especially at something like this with a replay tool, put your long or short position tool on a particular entry, see what happens, play it out. Then plays out, see if it hits stop. If it hits stop, you say, okay, go and do analysis of it again and say, okay, this is where I lost, right? Run it again. So then you just let it happen, over and over and over and over and over. And you see, okay, cool, this is what happened to me. All right, got in the market a little bit too early, et cetera, et cetera, et cetera. Like this, I'll be very honest. This particular trade here, I was like just in a hurry. I was like, bro, like this gonna sell. And I was just like, bro, hurry up. All right. And it was just getting sick of the market, taking its time. Where they go? All right. I was getting sick of the market, taking its time. I didn't rush the entry and just walked away. All right. Like my stop loss ended up being 45 bits because I was like, bro, you got in this way too early, way too early. Like I marked it out. I marked out the liquidity. I know and Martha, the liquidity, like, it was so clear. I was like, bro, this is going to trade right here, right above this area. into the liquidity, and then into this area here of imbalance, right? Boom, into that order block, and then we're gonna sell. Like that was like so clear. I mean, I literally had it on the chart, and then it was just like I taking an entry here right now. All right. And they got the entry here, I had to sit down and draw down, right? For price to come up here and do its thing, and then it dropped, right? But then you see, once you see the difference, right? This is 22 pips, for example. This was 44 pips. So 44 pips, look at what point it go one to one. Literally the entire move to go one to one, whereas this could at least mean like a one to two, type of setup, 20 pip stop, boom. All right. One to three, actually, all right. A one to three at that point, and smell. All right. Much simpler setup, take it easy, just a little bit more patience was required. Yeah, I was just very impatient at that point. I think it was Friday. Yeah. I was going to barber. I wanted to get into the market before I leave, because I don't like to be in trades, and I am not at my I'm not at my computer. I don't like to execute trades not being at the computer. Like try not to execute trades from my phone and so forth. Yeah, I don't like to do that. All right. And that's just a rule that I put in place for myself, because sometimes you look at your phone and everything looks spectacular, and you get on a bigger screen and it's like, bruh, why did I enter that trade? You know? So anyway. But yeah, guys, that's it for today. I hope you guys had a phenomenal session. I did. It's been good serving you. And I hope you guys continue to plug into the sessions, plug into the community, invite and encourage somebody, man, to like come on to the session, come on to the calls, come and learn with us. All right. You get so much more value. People sometimes be asking some interesting questions, and I know for sure they're not going through the information. I'm not saying not to ask questions, but going the information, going to the academy and telling you that all of it is there. We did not put any fluff in the academy, right? We did not put any fluff there. Like there's so much information there as well. Just gotta go through it, right? You just gotta go through it. And it's like so much valuable information, not just a bunch of, like I said, fluff. Okay. So, guys, with that being said, it's been good serving you, Victor, Vicky, Twina, T, Tig, Tanisha, Susie, Stacy, Sheldon, S. Wood, Steph, Sean, Ronald, Omar, Anika, Nathan, Matthew, Marvel, Marlene, Mandy, Chris, Super, Michelle, Carrie, Kiki, Henry, Hendo, Grace, Georgia, Juice, Dawn, Curtis, Carl, Anna, and Alvin. Hope you guys have a great night. Be blessed. I'm gonna see you guys on Thursday. Okay. Thursday, be back, 7 p.m. All right, be on the session. All right. And actually tomorrow, all right, tomorrow morning, 9 a.m. If you can be on the live session, be on the live session as well. All right. Have a good one, guys. Later. Care to see everybody awake.